Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mike Swanson, editor of WallStreetWindow.com. Welcome back to the show, Mike.
Oh, it's great to talk to you. We're actually, I believe, even though it's a sleepy summer, July, we might be heading to some interesting market moves right ahead of us.
Everything is down today as we speak, except gold. What's the story there?
Well, I think that might actually end up becoming a story that it's not just me and your audience and you talking about it, but it might become noticeable to the masses and that aren't paying any attention to it going into the fall. I think one of the most interesting moves in the financial markets that has happened in the past 2 months, and frankly took me by surprise, was the fact that the Treasury bond yields really have fallen dramatically. The yield on the 10-year Treasury bond is below 1.27%. While the rate of inflation is well above that level. The last monthly print showed annualized 5% rate. That's a sign that the bond market is factoring in a slowdown in the momentum of the economic growth we've been seeing in the United States. Much of the world is still suffering really dramatically from the virus situation. And it's a strange economic situation here also. But going into this year, the stock market was going up, all on the notion of this giant boom, the reopening, and now, that momentum is peaked. So I think what we're starting to see, just starting, is a shift out of risk in the United States and into some more safer, perceived to be more safer things. So, in the stock market itself, this is actually a process that has been happening underneath the market for the past several months, really starting in February. And it happened with, a correction in the NASDAQ, that took place in the spring, which beat down many of the Fed stocks that many Robinhood people owned in their accounts or still own. These stocks did great last year. Stuff like Peloton, for example, Tesla, and now really since February, these stocks have all been lagging. When the stock market made a new high 2 weeks ago, these stocks failed to do that and are still remaining way off their highs. And today, as you mentioned, the market's down a little bit, but these stocks are down more. And what has happened inside the stock market over the past week, we fell a little bit going into last Monday and have since had a rebound until today. But that rebound has been led by and driven by only a few stocks: Apple, Microsoft, Amazon, Google, Facebook. These are all big cap stocks that heavily weight the S&P and the NASDAQ. They all also report earnings this week, either today or tomorrow, each one. So traders have been buying the rumor, expectations of good earnings on these companies. They'll sell, and then we're going to have to see, is there enough money that, small traders have to buy the gap ups to keep the run going in these stocks, or not. But the bottom line is that the very fact that these stocks are what are lifting the market up now, it's a sign of a very narrowing of the rally that started a year ago. That's what you see at towards the end of a rally, if not the end. And it's sort of the same situation of getting out of less volatile things into, getting out of the more volatile things into the less volatile. And I think, this is going to help gold out, because gold, if you're looking, if you're an American or anyone and you're looking to get it into less risky, less volatile assets, treasury bonds have been basically the only thing that's been used for that since 1980, but they yield nothing. And gold is less volatile than the stock market. Last year when the stock market crashed, gold fell like 10%, the S&P fell 30-some%. In 2018, the S&P fell 20% going into New Year's in 2018. And during that decline, gold went up. I think we could be heading, not for a decline that dramatic, as those two I've mentioned, but a 15% pullback in the stock market, I think, is highly likely, between now and, say, Thanksgiving. And gold could easily see money flowing into it as a result, because we're at that moment where not everyone, is going to want to put all their money in bonds when bonds yield nothing. They're not going to want to just put their money in cash when we got inflation of 3 to 5%. Holding U.S. dollars that are guaranteed to lose 3 to 5% of their value every year, it's a disaster idea. But you're losing money in bonds too when they yield less than inflation, just not as much as you do when you're in pure cash. Hence, I think that's going to be a big thing that's going to help gold out, going forward. But, people, the way to put it is this way. Last year, we saw big money thinking this way, getting into gold, helping gold go up, institutional investors, endowments, so forth. Not the small investor, not the regular person that's that's got their retirement account in the United States. I think that mentality will slowly start to shift and start to become apparent to people between now and the end of the year. And I think it's no coincidence that, the market's down, gold stocks are, actually up, at the moment.
Now, you've pointed out Robinhooders who like to stay on top of the trendy things. Gold wasn't in their top 100 trades.
No, there was a moment where I think one or two mining stocks got on the list of the top 100 most owned. I can't remember if that was in, New Year's or months before that, but there are none on the list. Now, I'm speaking of not simply mining stocks, but even the gold or silver ETFs. Not a single position is on the top 100 most owned list. What's in the list? Apple's number 1, Tesla's number 2, but AMC is number 3. And it's kind of indicative of what these people are doing. AMC, it jumped up to number 3 in June when AMC went up to 70. It's been falling ever since. And if you go through, Apple is one of the exceptions of a stock on the list that's strong, relative to the market averages. It's, one of the ones I mentioned is the 5 or so stocks currently that have been leading the rally. But almost every other stock out of these 100 stocks is now lagging the averages. Tesla's doing that. That's number 2. And so what you have essentially are people in a lot of money losing situations. The crypto coins is another example. The statistics show that around New Year's, something about 1.7 million Robinhood accounts own crypto, and by February that number was close to 10 million. I believe it was 9 million. So 9 times as many people jumped in it. I saw a statistic last week that says that 15% of Americans own a cryptocurrency, and most of these people got in January in February as crypto made the run from 20,000 to 60. So, and now they're stuck. They're stuck. And I think that's what we're really seeing is you have I'd say two groups of investors in the United States, people that aren't really paying attention to their investments at all. They just got retirement funds, are kind of on autopilot, really unaware of what they're even in. Those are the kind of people that might start to look at things if the market declines and bonds don't really do that well and gold goes up. Those are the kind of people that are going to say, okay, this gold thing, I need that as an asset in my account. But the active trader, which is typified by the Robinhood people, they've been just chasing momentum, and now all those momentum plays have peaked out. They're holding a bag, just like the cryptocurrency people are. And, at some point, the market does correct. These things they're in are going to fall much worse than the stock market, and a lot of them will sell and get out. And hopefully, some of them move into things that work better, which I put gold, silver, and the mining stocks on that list.
Have they been in a situation where they feel they're geniuses because everything's worked out so far?
I think they had until recently. I think, one of the statistics shows too that the amount of trading volume has diminished over the past few weeks. So I would say as the momentum faded in many of these positions they've been in, that they've kind of perhaps lost interest, and are just kind of holding on to stuff they'd already bought and not being as active as they were because the trades aren't working as well when they enter one. So I would say these are people that are just kind of in a holding pattern. It's summertime. Probably a lot of them are actually on vacation, and they may not be paying that close attention, but if the market does decline, between now and say Thanksgiving, I'm just speaking of a 10 to 15% decline, they will wake up because, their positions will fall more. My suggestion is not to be scared. I mean, a 10% decline is nothing, or 15%, nothing to normally be scared of. But, when you hold garbage, it becomes something becomes a problem. And I count collectible coins, virtual coins, as garbage. Yesterday, Bitcoin, went briefly above 40,000, because there were rumors spread before the market in the United States opened that Amazon would accept payments for Bitcoin. And so by the time the market opened, Bitcoin was up. And this rumor was spread on Twitter, on social media, and Reddit, and all these other strange places I don't even know about or go to. TikTok, you just go down the list of weird social media places where people hang out and spread cryptocurrency rumors. And now, before 7 in the morning, at least, when I was reading the news at 6 in the morning, Amazon had already come out with a statement saying they're not accepting Bitcoin, and they disputed all the rumors. They're all false. False, false, false. And now Bitcoin's falling. The point is not just to pick on Bitcoin, but to suggest that this is the type of craziness that has, the people have been trading, and it has fueled movements in various things. How many times did we see Elon Musk over the years put out tweets about Tesla that then became unsubstantiated? I mean, he basically said at one point that some billionaires in Saudi Arabia were going to buy out his company, and it was completely false. False. The SEC, in fact, investigated it, and he had to pay a fine. And now, inside the stock market, we're also heading for another situation that I think is ultimately going to be a good thing, even if it is going to cause pain for many people, and that's the OTC market, the over-the-counter penny stock market, is heading for a massive crackdown. because what has happened is over the past year, a lot of these stocks have gone up on nothing. These are companies that do not file with the SEC. They don't have any accounting. They don't tell you what their earnings are. They reveal nothing about them, and you don't even know how many shares are outstanding. They're totally opaque companies, and they got penny stocks, and CEOs of these companies put out tweets about, oh, we're going to do a deal, we're going to do this and do that. And I mean, I'm talking about there's probably 2,000 or 3,000 stocks that have been doing this, and then they have gone up, and they're just junk. Look, I invest in penny stocks and small cap stocks, and in the mining world, it's full of them. But in the mining world, they have filings, with the Canadian regulators. If they're trading in the United States, 99% of them are filing the SEC too, because they are companies that do things in the real world. They have management, they have CEOs, they're exploring for gold, they have operations. These penny stocks that I'm talking about are heading for a crackdown. They have nothing. They just issue tweets, not even press releases. And the SEC is going to crack down on them in September by, they've already announced that they're going to regulate it so that brokerage houses in the United States will no longer allow their customers to buy or sell a share of these stocks. So they'll cease to functionally trade. And so if people own these things, they don't get out before this time comes, they'll be trapped. The only way the companies can prevent this from happening is to do the right thing, what legitimate companies do, and that is file with the SEC if you're a publicly traded company. Reveal your earnings, show your balance sheet, show the shares outstanding. But I think a lot of these people aren't going to do that because it's, they've been doing something very shady, and but so many shady things have been going on, in the markets, you can't keep up with them all,
We'll have more with Mike Swanson right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Mike Swanson. What's going on with crude?
Well, with commodities in general, we saw a secular low in oil last year in the spring. I mean, oil futures briefly even went negative. And then from January to, let's say, June, energy stocks are among the top performing stocks in the entire stock market. I own them, so I follow them closer than some of the other sectors. And oil went up to $77, and then this month is hit 65 and bounced back up to 72. Historically, oil will make a peak in July and then fade a little bit into the fall and then bottom out again. It's like a seasonal pattern that could be playing out. But if we look at the price of oil in the context of the entire commodity complex, we see that commodities as a whole, you can look at the CRB index to track, all of them. But I also like agriculture commodities. I own, for example, the DBA ETF, which tracks them. That ETF made a peak in May and has been going sideways. It's now back at the top of the range. But all these commodities had tremendous runs from, say, May of last year to this May. oil peaked in July. Part of the reason we saw the pullback in gold and silver in June was, I think, the commodity and complex as a whole made a peak in May. And so we're in a consolidation phase, for commodities in general. And I think that's what's also going on with oil. We're in a sideways, consolidation, I would say, in oil. You know, it could possibly go a little lower than that 65 price, but I wouldn't really worry about it. My expectation is, you know, these commodities will all be going higher, in the future. You know, by year's end, we'll be seeing new highs in probably all of them at the latest.
Before we went to air, we were chatting about how used cars are going for tremendous prices if you can find one.
Yeah, that's part of the weirdness of the economy. I mean, I was telling you, I had to go in town and run some errands. I went by a bunch of new car dealerships whose lots were completely empty. I mean, and these are places that used to have over 100 cars, and it's been this way for several months. But I also have several friends that are used car dealers, and I went by one of their lots. They only had 3 cars for sale on the lot. So, it's a remarkable situation. It's just the shortage of parts and disruptions and shippings, you know, all over the world causing this, bottlenecks in the economy and so forth. And I think that's indicated that we are in a very strange economic time. Yes, the GDP numbers showed it rapid expansion in the first 6 months of this year, but that momentum from 0 to, 70, I wouldn't say we're at an economy growing at 100, the maximum it could possibly grow. But we did start, but the key is we started from 0, you know, all those lockdowns and shutdowns, and people can't even get out of their house the way it was, you know, a year ago. So that acceleration creates these dramatic headline numbers in GDP growth. But now, you know, the acceleration is peaked, and look around at what the world's really like, and it's strange. You know, the car sales is one indication of that, but I can go, last week, I don't like Starbucks, but there's one near me, and I thought I wanted to go inside. I haven't been inside of a Starbucks in maybe 2 years, so I just got an inkling to go in there, and when I went in there, no one else was inside except the customers working there. I was the only person. You know, it's bizarre. And then sometimes I might go out to eat somewhere, and one restaurant could be fairly busy, and then I go somewhere else, and no one's there. Very strange time we live in, you know, and I don't know when it's gonna be the way it was before March 2020. I don't know when it's gonna be back to so-called normal.
Mike, thank you so much for chatting with us.
Thank you. Great to talk with you.
My guest has been Mike Swanson, editor of WallStreetWindow.com. If you have any questions for Mike, we'll ask it for you if you send it to info@HowStreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.